What's up, all my Cash App investors? I hope everyone's having a great Friday. Today I'm going to be talking about the difference between stocks and ETFs. And before we get there, make sure you hit the thumbs up, like this video, subscribe to the channel if you haven't. Before I get into the stocks and ETFs, I do want to kind of explain my channel is about just investing in general. It's not specifically for investing in stocks. But it's not only specifically for content creation. I'm trying to just do a little bit of both. I do some knowledge videos on stocks for you guys, and then I love doing the daily vlogs for me, kind of just me running around with my camera and doing some creative work. So if you like some of my vlogs, make sure you hit the thumbs up on those two. And if you don't like them, hit the thumbs down. That's totally fine. And let me know what else you guys would like to see about investing on my channel. Hopefully down the road, I'd like to get into investing in real estate as well too. So there could be some potential to see some of that down the road. Now, let's get down to the business. With stocks, let's first talk about the drawbacks. There's always a chance of a company going bankrupt. So that's what you're kind of getting with stocks. So if you're invested in a company, they happen to go bankrupt this week, boom, you lose your money. Voila. Another thing is with stocks, with these companies, they're not that liquid. They're a company and they're trying to run a business, and sometimes they don't have all that money that they're worth to just pull out and do whatever it is they have to do, because they have to invest. They have to do all these type of things. They have to pay employees. So they're not as liquid as everybody might think they are. Another bad thing is that it fluctuates off news. Sometimes fundamentals, but a lot of times analysts, broadcasters, the news companies, they're kind of fluctuating it based off stuff that's happening. Some good things about investing in the stock companies is that I feel like obviously with the high risk, you get high reward. So if you invest in a company like Tesla when it was at 200 and it's now trading at $700, that was a nice it was a nice risk. Yes, Tesla wasn't considered that big of a company. I mean, I guess it was a few months ago. But people invested in it, and now the price went up. So you kind of get that option with the stocks. You can invest in a company that actually ends up performing very well in the eyes of the people, or maybe even give people FOMO, fear of missing out. So they want to jump in and buy stocks. The stock price shoots up, and you make money. Now, I'm going to try to break down ETFs to as simple as form as I can, because it can get a little complicated. So ETFs is more of a basket of securities. It's a lot safer based off the research that I've done, and pretty much they're more liquid. Not all of them though. I would say based on my research, the more popular ones are the more liquid ones. There's more people involved. So you can get an ETF in the Dow. You can get an ETF in the S&P 500. So basically, the price is going up and down based on how the whole entire market's doing. ETFs have options. So you can if you want to invest in the financial part of an ETF, you can do that. They're less riskier, and they don't fluctuate as often. So ETF is kind of like, it's a safe play, but it's more boring. It's less riskier. Stuff might fluctuate here and there, but it's not jumping up and down as much as the company stocks would. The ETFs are just so much more harder to understand. I'll keep repeating that, but that shouldn't stop you from doing research into them. I also kind of read that this repricing can occur, which, I can explain it to you, but you need to research it yourself, because it was a little confusing on my end, and it just didn't make sense to me. But pretty much if you want to go with the safe bet, you go with the ETF. If you want to take risk and you want to be on your phone all day long, you go with the company stock and you do your research. For me personally, some ETFs that interest me, obviously the Dow's up. I believe the Dow's up right now. The S&P 500's up right now, and they're being backed by the government. So even if the economy's not really doing great, the government's gonna be throwing some money into those markets, those huge markets, so that they stay up and they look good. Because of course, we ain't gonna make our stock market go down. But if you want to stay with the safe bet, go with ETFs. If you want to take the more risk, do more research, be on your phone all day, watch the market fluctuate up, down, up, down, up, down, up, down, and then maybe hopefully all the way up. Go with your stocks. Some ETFs for you guys to look out, aside from the Dow and the S&P 500, I would say would be the Gold Trust ETF. That's one that I've been looking at for the last month. And I don't know why I haven't pulled the trigger on that one, but after this video, they're going to be more and more and more on my watch list, because you just never know where this market can go, especially with some of these companies. A lot of these companies are dependent, a lot of these stock companies are dependent on the people. So if the economy gets worse or people stop spending, people, who knows, you might want to be on the safer side in the ETF. But if you're paying attention, I feel like, me personally, if you're paying attention and you're doing your research, you might as well just go with company stocks. Now, some people may disagree, but this is how I look at it. If you're going to gamble, you got to gamble high. That's just how I see it. You got to take, if you're going to take risks, you got to take all the risk. Playing it safe is cool if you want to use ETFs as a savings account and just watch it slow, maybe go up one day, maybe go down a week later, maybe go back up 2 weeks later. Then, if that feels good to you while you're still learning the company stock market, great. It always doesn't hurt to diversify, so you can have some of your money in the ETFs to, as your safe bets, and then you can get your risk on the company stocks. So do what's best for you in your pockets. I'm only just trying to put the information out there so that we know what we're working with. I hope everybody took something from this video and could learn something and hopefully apply it to their portfolio. People, continue to do your research. There's a lot of things happening right now, and I don't want any of us to lose money. Make sure you're paying attention to the market, especially if your money's in the market. I'm happy right now. What I'm investing in right now is doing good, but that's today. Anything can change tomorrow. Well, actually Monday, since it's Friday. But I hope you guys have an amazing Friday, have an amazing weekend. Continue to prosper, continue to save. Just remember, don't go spending that money on stupid things, and just invest it into something. Invest it either into yourself, into your craft, into your brand, into the stock market, into real estate, into something that can bring you back money. That's what I'm trying to preach here. Really, it's just investing in yourself, investing as a whole. I feel like that's kind of something that our culture just isn't really getting taught as much. But I'm going to try to do my best to pass along as much information as I can, break it down as simple as I can, and then you got to take it from there and do your research. With all that being said, thank y'all for watching. I will see you guys on Monday. Stay blessed, everyone. Hey, before you go anywhere, subscribe and watch the recent video. It really helps me. It makes me smile. I see it. I see it when you subscribe or when you watch the other videos. It makes me smile. I be here smiling. You give me the warm heart. Don't you want to put a warm smile on my face? Y'all know what to do.